Welcome, cryptocurrency traders. This is Josh Wally checking in with crypto technical analysis, news, and signals, aka the Kings of Crypto. This will be a live Crypto 101 session on trading terminology, chart patterns, technical analysis lessons, and more. Anything and everything you guys need to know to get into the crypto trading community. We will also be uploading this to our YouTube channel at a later time. If you guys are catching this on our YouTube channel at the later time, send us an email at thekingsofcrypto@gmail.com if you guys would be interested in joining our trading community. Okay, so we're going to start with some trading terminology. We'll move on to the trading tools that we use. Then we'll discuss some technical analysis, chart patterns, and have a question and answer session. Can I get a sound check, please? Can you guys hear me all right? If you guys can hear me, please leave a comment. Okay. Everyone can hear me fine? Okay, so we're going to break this down as basic as possible. For those of you more experienced, my apologies, as the beginning of this might be a little more basic than what you're looking for, but this will be for anyone trying to get into the cryptocurrency markets for the first time or into trading for the first time period. Okay, so our first term is going to be bull, a person who believes the financial instrument's price will rise. Next we have bear, a person who believes the financial instrument's price will fall. A bull market is a market that is trending higher. The psychology of those that are involved in a bull market would be one of euphoria. In a bull market, the investors tend to have little fear of the risks as the market is shooting higher and higher and higher. You can see Bitcoin in 2017. We had quite a beautiful bull market, and ever since mid-December, we've been just trending lower, kind of bleeding out, slowly just trickling down. So we have entered into a bear market, a market that is trending lower. Okay, now our next term is the word long. If you hear one of our analysts say, I am long BTC at 11,118, that means the analyst just bought Bitcoin at 11,118. Short would be to sell. Typically in crypto, we just say that we sold. In the stock market, you can actually short sell stocks, which is like selling a stock before you even ever own it because you think the price will go lower. And as the price goes lower, you buy the stock to close your position and make a profit off of the stock actually moving down. In the cryptocurrency markets, we do not have that capability right now, so that's not a term that we use very often. Okay, bid. Buyers who have orders to buy at a lower price. Let me pull up something for you guys. Just give me one moment. Got a window loaded. Okay, here we go. Okay, here is GDAX. Now this would be the bid. We have a buyer that wants to buy 1.277 Bitcoin at $10,959.99. So this buyer has put out a bid for the Bitcoin at this price, which is currently lower than current market price. Next, we have the ask/offer. That is sellers. Oops. Okay. The ask/offer. This would be our ask/offer right here. This is sellers who have orders to. Oh, geez. That typo's all over. Sorry about that, gentlemen and ladies. The ask/offer is right here. You see this person has offer to sell 16.38 Bitcoin at the price of $10,960. The offer is for sellers who have orders to sell at a price higher than current market price. A whale. A whale is someone who owns a lot of crypto. A whale order. Orders larger than usual on that particular financial instrument. So say you see all of these tiny orders for 0.75 Bitcoin, 1 Bitcoin, 0.05, 0.009, and then this guy has an order for 16 Bitcoin. See if we increase the aggregation, I can look at the order on Bitcoin. I like to look at the orders in $10 increments. So you see here's a whale order down at 10,900. That's a lot bigger than the average order. We've got a whale order to sell at 11,000. See lots of whale orders all over. Bitcoin is being a lot more thickly traded than typically. Look at this whale order down here at 10,800. 198 Bitcoin. That'd be approximately $2 million. Okay, moving on. We have a depth chart, a chart that shows current open orders of buyers or sellers. Let's go ahead and open up the depth chart. Oops, wrong window. Okay. Here is our depth chart. Basically what we have is we can see where there's large buyers and large sellers. You see here at 10,800, just like on our depth chart, you can see there is just a wall of buyers. You see we have small walls of sellers at 11,000, 11,100. We can zoom out further. The wall of sellers up here in the $13,000 range. And our biggest wall of buyers looks like it's actually at $7,800. Okay, so that is the depth chart. Next, we have the order book. It is the same information as in the depth chart, but displayed in list format instead of in a chart. The order book is basically just showing the bid and the ask/offer. This is our order book right here. That's just seeing the book of open orders that are currently in the market. You can also click this trade history tab and see the live orders as they're being executed. This would be people buying on the offer or selling on the bid, typically using market orders. Okay, now this is a term you might have heard me say and not known quite exactly what I meant. Price action. Price movements. Example, if I say we're experiencing some choppy price action, that would mean the price is jumping around wildly and unpredictably. Next, we have entry. That is the recommended point to enter a trade. We sometimes recommend entry if we reach above a certain price or break above a descending resistance. Don't worry, we will discuss descending resistances later on in this lesson. Stop loss. Recommended price point, which we will admit defeat and cut our loss, protecting our capital for the next opportunity. When we post our trade ideas, we always post an entry, a stop loss, and profit targets. The stop loss is simply where we will admit defeat, admit that we were wrong, cut our loss. Instead of holding, hoping, and praying that the price will come back in our direction, we cut our loss and protect our capital for the next opportunity so that we live to trade another day and all of our money isn't tied up praying, hoping, and waiting for a price to return to where we entered. Next, we have profit target. Profit target is the recommended price to lock in some profit, which would be sell. This could be where you sell all of your position. Say if you buy 100 coins, you could sell all 100 coins. At a profit target, you could sell 50 coins, you'd sell 75 coins, and wait on the next profit target. Partials. A lot of times when we post a trade, we will post multiple profit targets. When multiple profit targets are listed, one strategy is to lock in a small amount of profit at each profit target. Our profit targets are typically right below resistance points. It is likely to encounter pullbacks after hitting each profit target. Our profit targets last week were dead on point. You see, basically we sold right at the peaks of a lot of the moves. We'd encounter a pullback, have a new chart pattern, and that breakout might take us to the next profit target. In a bearish market, it is wise to go after the shorter term profit targets as the entire market is trending lower. Any movements up are usually sold back down as you have people just trying to get their money back that they are losing on their position. This creates a traumatic, basically psychological standpoint of the market when we are in a bearish market. And just that psychological standpoint of the market itself tends to keep pushing us down lower. The daily chart. On the daily chart, each candlestick represents one day. You see right now we are looking at the Bitcoin daily chart. Each one of these candlesticks represents one day. Next, we have intraday chart. Okay, first off, before we move to intraday chart, I just want to mention one more thing. A lot of times our traders have heard me say, well, we're experiencing a breakout on the daily chart, which would basically be a chart pattern that is moving to the upside on the daily chart. And I advise that we wait for an intraday chart pattern to get in and be able to manage our risk. This is basically aligning our trade on multiple time frames, looking at the daily chart, as well as the intraday chart to find our trades, to manage our risk, and to find some good profit targets, high probability trades. Okay, intraday chart. Each candlestick represents shorter time frames. We typically look at the 15-minute chart and 1-hour chart for our intraday charts. The higher the current volume, the faster time frame you should be looking at. So say Bitcoin is going through a huge surge on a crazy amount of volume, or a huge crash on a crazy amount of volume. Sometimes I will look at either the 5 or the 15-minute chart to look for reversal patterns. If we're crashing, I'll look at, say, the 5 or 15-minute chart to look for reversal patterns to get in as close to the bottom as possible. Now, once I get in as close to the bottom as possible, if my chart pattern breakout fails, I can manage my risk by cutting my loss when we dip down below what was the previous lows. When we're going through a surge, if I see a flag pattern, we will discuss flag patterns later in this video, but I will get in towards the bottom of the flag pattern so that if we break to the downside of the flag, that I can cut my loss with a small risk. This helps me keep a bigger reward potential than risk potential. And if you take the trade at the right point, then it is a very high probability winning trade. Let's pull up an intraday chart right now. Okay, there's the intraday chart for Bitcoin. That is the 1-hour chart. Looks like we're starting to see the potential of a reversal, but we are still trending down at this point. Okay, arbitrage. Arbitrage is the act of buying crypto on one exchange, transferring to another, and selling for profit. Let me give you an example. Earlier this week, we had a 3% spread between the price of Litecoin on GDAX and the price of Litecoin on Binance. I have been wanting to move some of my money out of GDAX into Binance to trade some altcoins. So I took advantage of that 3% spread. I bought some Litecoin on my GDAX account. I transferred it to Binance and I sold the Litecoin. I was able to gain 3% just by transferring my money between the exchanges. Now, the problem with this is the reason we cannot do this all day long. There is no way to transfer USDT or Tether from Binance back to GDAX. Because of this, I would have to transfer my Litecoin back to GDAX, and at that point, I would have been taking a 3% loss when I transferred back. So I couldn't constantly just sit there and do it all day long. Now, when you're looking to move your money from one exchange to another and the spread is in your favor, that is definitely a good time to enact arbitrage. I'm sure some of you have heard me say the term financial instrument. Financial instrument is any stock, coin, commodity that continually fluctuates in its value. So Bitcoin would be a financial instrument. Gold would be a financial instrument. Apple stock would be a financial instrument. Next, we have an ICO. We won't get too in-depth on ICOs other than its meaning. An ICO is an initial coin offering, the entrance of a new coin to the marketplace. Last week we had IOST, which was a big name ICO. One of our members was able to profit 80% off of this move. I was personally able to profit 23.3% off of the initial ICO. When it dropped, we had a 98% drop out of the gate. We basically bought the bottom and sold into the dead cat bounce. IOST actually gave us several trades throughout the week. 23.3% on my first trade, 7% on my second trade, and 10% on my third trade for my partial, and I actually got 17% on my last piece of IOST on my third trade. So IOST was a very, very nice chunk of my gains from last week. Fork. A fork is a copy of a repository. Forking the repository allows you to freely experiment with changes without affecting the original project. Most commonly, forks are used to either propose changes to someone else's project or to use someone else's project as a starting point for your own idea. So when we have Bitcoin fork into Bitcoin Gold, into Bitcoin Cash, into Atomic Bitcoin or whatever it was that was just created last week, those are forks. In my opinion, forks are basically diluting the value of Bitcoin. The more Bitcoin forks, I think the less Bitcoin will be worth in the long run. Okay, the term pump. Pump is hype, often via social media to sucker amateur investors into a blind investment. Dump is when there is heavy selling. A pump and dump is a coin that is being hyped by someone who can gain financially if the coin's value increases. The person who pumped it up often dumps all their coins and causes a decrease in price at the expense of those who bought into the hype. So say Tron, say Justin bought 10 million Tron and then decided once the price went up 1,000% that he wanted to sell all 10 million of his Tron. He caused a drastic decrease in the price, and those that were buying at the top lost an excessive amount of money. That's basically an example of pump and dump. I'm not saying that Tron was necessarily a pump and dump, but I'm just trying to give an example of what a pump and dump could be. See the little angry reaction face. Like I said, I'm not saying that Tron is a pump and dump. I'm just trying to give an example. I know Justin is trying to do big things with Tron. Support, an area on a chart where buyers have flooded in the past. Resistance, an area on the chart where sellers have flooded in the past. Let's go ahead and take at support and resistance on Bitcoin's daily chart. Okay, you see there was this nice resistance point. You had the seller slam it back down at this price point here. We turned this resistance into support on this day right here and had a nice bounce off of this level. We closed right on this support and resistance line the following day. We rejected that support and resistance line on this date. We got back up to this price point and rejected the resistance line on this date. In trading, we say support turns into resistance, resistance turns into support. So basically what that means is if we are below this line, it is a resistance. If we are above this line, it will turn into a support. Here is another resistance that we had. You see this resistance acted as support over here. It acted as support over here. And we've basically been hugging this support and resistance line right here throughout the last several weeks. Now we have ascending support/resistance, a line of support/resistance that is moving at an upward angle as time progresses. Descending support/resistance, a line of support/resistance that is moving at a downward angle as time progresses. Let me go ahead and give an example of this on Bitcoin's daily chart. Okay, what we have is a long-term ascending support that I'm going to show you an example of right here. See, if we start at this point here, we go through here, you see we bounced off of this level here, we bounced off of this level here, we bounced off of this level here. So this would be a long-term ascending support. This purple line right here would be a long-term ascending support. To ascend means to rise, and to support means that at this point we get lots of buyers that are interested. Now, if you see this long-term ascending support break, then it will turn into resistance, and we will most likely get a violent reaction in the price. If this long-term ascending support breaks, then the bear market will continue. Now we will give an example of a descending support/resistance. If we come up to our very peak up here at 19,850, and we go at a downward angle of the next peak right here, this would be our descending resistance. Another thing we had been watching on Bitcoin over the last several weeks is this short-term ascending support. And this shorter term descending resistance. You can see once we broke out above this descending resistance, that is when we thought we had a good chance to try to make a run up towards this next descending resistance at the 14,000 level, possibly at the 13,000 level. As you see, this 13,000 is definitely a support and resistance point. Trend, the natural direction of a financial instrument is moving. So over the last month, the trend of Bitcoin would be kind of like this. If this would be the top of our trend, this is the bottom of our trend, and we're trending down in a channel. See this, this channel can definitely not continue lower forever. Even if we do continue in a downward trend, I'm sure we will still find many opportunities to profit. They will just be shorter term trades as the bearish market would continue. What I'm hoping on Bitcoin right now is that basically we had this short-term wedge formed. We broke out of the wedge. Now we're retesting the wedge. And if we're able to continue riding up this line, we could break out of this longer term descending resistance and be on the way back up to 17,000. If we break down out of this wedge, we will most likely be retesting the support, probably get a bounce back up to this short-term descending resistance, and then this will be a very pivotal point in the chart right here. If we break to the downside, then we could very likely see 8,000, 7,800, 5,500. It's hard to say exactly where the price would take us from there. A uptrend is a financial instrument that is moving higher. Each peak is higher than the last. Each dip is also higher than the last. An uptrend is created by higher lows and lower highs. Bitcoin, you see, we had an uptrending market in October and November and December for the most part. See, this was our high, this was our low, 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 this was our high, this is our low. What we're seeing is each one of these highs is getting higher and higher. What we call that is a higher high. And each one of these lows is also getting higher. So we call that a higher low. That is the definition of an uptrend. And a downtrend is a financial instrument that is moving lower. Each peak is lower than the last. Each dip is also lower than the last. A downtrend is created by lower lows and lower highs. Let's get an example of a downtrending market. We had this peak up here. This would be the high. Now this would be the low. Then we put in a lower high right here, a lower low. So that is a downtrend. Here is the high, the low, a lower high, and a lower low. We put in another lower high, but this time we put in a higher low. We put in another lower high, and if we can hold up at this price here, we'll put in a higher low. When you're seeing higher lows and also lower highs, basically that is the price being compressed into a wedge like what we have here. And then we're waiting for a breakout to form a new trend. Whether it be an uptrend or a downtrend, all we can do is wait, watch, and as traders, we react and try to take advantage of any chart setups we see for high probability trades to profit from the situation. At this point right here, we have a lot of indecision. If someone wanted to make a trade based on this uptrend holding, then they could stop out if we came below. But you see there's a support level here, a support level here, a support level here. Any of these support levels could catch Bitcoin and push us back higher, or they could fail to catch and let us continue to fall. Today I did not take any trades because we're just in a point of indecision in the daily chart. If I start seeing some price action that I like, then I will definitely get back involved. Okay, I just kind of went over this, but a higher high is the peak of the current move is higher than the peak of the previous move. Here would be an example of a higher high. Here is this high. We've got a higher high, another higher high, another higher high, and another higher high. An example of a lower high, the peak of the current move is lower than the peak of the previous move. So we have this high, this is a lower high, this is a lower high, and this is a lower high. Higher lows. The lowest point of the current move is higher than the lowest point of the previous move. You see, this was a low, this was a lower low, or a higher low, this was a higher low, and a higher low. Okay, next, we have RSI, the Relative Strength Index. RSI is measured on a scale of 0 to 100. 0 to 30 is oversold. 70 to 100 is overbought. Big dips while oversold are typically worth buying. Big pops while overbought are typically worth selling. The breakouts while overbought tend to fail. This is why if we are overbought or extended to the upside and we have a nice chart pattern and it breaks out, I do not buy into these trades because there is a higher percentage, a higher probability of that breakout failing and for me to result in a financial loss. I work hard for my capital and I prefer to be sure when I enter a trade rather than just randomly entering trades because I'm bored and there's nothing else to do. Let's go ahead and show you how to add RSI to Coinigy. I'll go over this charting platform here at the end of this video lesson. There's Relative Strength Index. Excuse me. Okay, so here's our daily chart RSI. You see we were very overbought even when we broke out of 10K. We were even further overbought when we came up here to 18K. We are now definitely towards oversold territory. You see these dotted lines basically mark what is oversold. You see as soon as we start approaching oversold, we tend to get bought right back up. And once we break out of being, once we are overbought, we tend to sell back down. In a bull market, even when it's overbought, there is potential to continue moving higher. In a bull market, any low RSI tends to get bought right back up. In a bearish market, the low RSI trades do not always work. Sometimes the low RSI causes more panic than it does buyers seeing it as a buying opportunity, just because of the psychological state of the market. Okay, next, a pivot. A pivot is a price point on the chart where price has changed trends. Always expect pivots to act as a support or resistance. Okay, let's go ahead and go over that. You see, once we broke over 10,000, we came up to this 11,200 area, 11.2 to 11.3, and we sold off of that level. That is where the price pivoted. We came back up and we sold off. We came back up, pushed up to it, pushed through it, sold back right to it. And after we broke above this, then we went to the moon. So this was our pivot. This up here was a pivot. This up here at 19,850 was a pivot. And this would also be a pivot. You see this pivot was respected when we came back over here. We had this hard pull into the pivot and we bounced right off. Another hard pull into the pivot, bounced off. Another hard pull into the pivot, bounced off. another hard pull into the pivot, bounced off, and finally, once we broke through the pivot, we got a violent reaction. We're able to bounce off of this long-term ascending support, and we bounced right back up to our pivot. Once we had a daily candle close above the pivot, you saw intense volume come in, and it pushed us up to this descending resistance where we failed and sold right back off to the pivot. I hope this is making sense to you guys. If anybody has any questions, feel free to leave a comment. Channel, price action that is trapped within two support and resistance lines. These could be horizontal support and resistance lines or ascending/descending support and resistance lines. Let me say that again. A channel is price action that is trapped within two support and resistance lines. These could be horizontal supports and resistance lines or ascending/descending support and resistance lines. Here is one example. From this area on the chart over to here, we were trapped within a channel, this being the top of the channel, this being the bottom of the channel. I'll give you another example of a channel. So you see we had this channel right here. We had an ascending support and an ascending resistance. Once we were able to break out of this channel, we had a very, very nice move to the upside. Since then, we have developed another channel. Now we're within this channel. This is a horizontal channel. What we look for as traders is basically these ascending channels. We can buy on the bottoms of these channels, sell up here at the tops. And occasionally buy the breakout of this channel. In this case, I would not have wanted to buy this breakout because you see we were quite extended when we broke out of this channel. It did have a nice resolution, but that's not exactly the type of high probability trading setup that I am looking for. Okay, now let's go over the candlestick names. We have bullish/bearish engulfing candles. We have hammer candles, harami, shooting star, spinning top, and doji candles. Here's an example. This is our engulfing candle. A hammer candle, you see the long wick that gets bought back up and it closes green looking like a hammer. A harami, we have a small wick on each side, but we close towards the top of the candle. A shooting star would mean we started down here. We came all the way up and got sold off and closed just barely green on the candle. This is usually a sign that the price will reverse back to the downside. A spinning top means we had a huge wick on each side and just a very small body of the candle. This is basically showing indecision. And we have a doji where there's a wick on each side, and we closed right at where the open of the candle was. This is also a sign of indecision. Okay, next we'll go over some chart patterns. The first chart pattern that I'd like to go over is called a head and shoulders and an inverse head and shoulders. I said to Alex when we were at 19,000 trying to break 20,000 on Bitcoin, it looked like we were forming a head and shoulders pattern with 19,000 basically being the head right here. Let's take a look. Okay, so you see we had this nice uptrend. We made a left shoulder here, tipped back down, came back up and formed a head. And at this point is when I said, Alex, let's be careful here. This could be the developing of a head and shoulders pattern. You see we came back down to the neckline. We came back up. Here's the right shoulder. And we came back down to where the uptrend basically had started. So the head and shoulders pattern was completed. Now we're basically waiting for a nice reversal. Inverse head and shoulders would be basically the opposite. You have a downtrend, left shoulder, you pop back up to the neckline, you go down and make a new low, you come back up to the neckline, the point of the left shoulder holds as a support, and that is when this left shoulder holds, that's a sign of an inverse head and shoulders and a good buying opportunity to ride the wave back up. Next, we have a bullish flag pattern. You see, this is what our trade on XRP was the other day. Let me actually bring up that alert. Okay, you see there's what the textbook bull flag pattern looks like. On XRP, we alerted our chat room members. This nice bull flag pattern. See, here was the flag, there was the breakout point, and look at that beautiful resolution. This was one of the best trades of the week for our chat room members. If you guys are interested in joining our chat room, send us an email at thekingsofcrypto@gmail.com. Okay, next we have a bear flag pattern. Here is the bear flag. You got the flagpole, downward consolidation. You see we attempt to make an uptrend. Once that uptrend does not hold, then Then we continue the breakdown. So that is the bear flag pattern. Okay, next we have the cup and handle pattern. This would be a cup and handle pattern. You get the cup. Basically, the cup would make a double top. You start to pull back within a downward channel. Once you break out of that downward channel, that is the end of the handle, and there's your cup and handle breakout. This is where you would want to enter a trade on a cup and handle, or if you start noticing that it's looking like a cup and handle, you could draw an uptrend at this line here and stop out if you were able to dip below that. That would be a good way to trade a cup and handle. Next, we have a ABCD pattern. What we have in an ABCD pattern is a nice spike. There is A. Then you wait for it to come down. Never try to catch a falling knife because you never know when that move is going to continue to the downside. Wait till it puts in a bottom. This is B. Then you come up and start to curl up and round off. It puts in a new bottom. So C would be where you enter this trade. You would put your stop loss under B. Your first target would be at A. And if you can break out over point A, then that would be the ABCD breakout. So basically our profit target for a partial would be A. If we fail to break out over that point, we could stop back out when we come back to break even on the rest of our trade. If you had a higher risk tolerance, you could actually wait until after B broke. But after I have taken a partial on my trade, I never like for my winners to turn into losers. So I always stop out break even after I've hit in one of my profit targets. This allows me to continually have a very high winning percentage and to make a consistent profit, consistently winning more trades than I lose and consistently making more money than what I give back to the market. Okay, so that is the ABCD. Now let's discuss aligning trades on multiple time frames. I mentioned that earlier in this webinar. Let's open this in a new tab. Actually, this is kind of setting up nicely for a nice flag pattern. You see this was our prior resistance. It's now acting as support. We've got this nice flag here. We've got a smaller flag on the inside of this. You could use this as an entry. This is a partial profit target. If we're able to break out of this descending resistance, we could have another profit target at this level here. Another profit target at this level here. Final profit target would be at this level here. If you wanted to go back longer term on the chart, you could make another profit target here. here, here, and here. So XRP looks like it's starting to set up nicely again. Anyways, that wasn't the point of me pulling this up. It's just a nice quick lesson. See if I can't get my chart layout to load. Okay, let's just go ahead and do it again from scratch. Okay, so what we're talking about is aligning a trade on multiple time frames. What we were watching on our XRP trade is this nice flag here. This was our flag pattern on the XRP daily chart. Now at the same time, we are also forming a nice wedge. See, once we broke out of this wedge, we had this nice move to the upside. Now let me show you how I align this on multiple time frames. Okay, so basically I watched the daily chart to identify a trading opportunity. Once we broke out of this wedge to the upside, I began looking at this on faster time frames. First off, let's look at a zoomed out picture of what this chart setup looks like on the 1 hour time frame. You see it still stays very well respected inside of this wedge. Very beautiful flag pattern. Removing that whole line. Just a moment, let me get that fixed. Nope, that would still be accurate. Okay. So what we did was we began looking at this on the 15-minute time frame. Pull this up real quick. Okay, so what we had was once we broke out of this descending resistance, you see nice volume coinciding with the break of that descent. Now those of our traders that like to be early to the ball game got in right here in this range. We did post this trade before we broke out of this wedge. Now, after we have a nice daily chart breakout like this, what we look for is some type of flag pattern or wedge to form to allow us to get in and manage our risk. Then what we look for is some type of descending resistance where we can base our short-term profit targets off of. Okay, and then there's several other day trades we could have taken during the setup after this nice steep oversold RSI breakdown. Once you break that very steep angle of descent, you can take another trade. With your entry right there. So we will have XRP on watch again for the breaking of this wedge right here. We perhaps have an early entry if we are able to get above this point here. See, this will be a pivot and a resistance here. Anyways, you guys get the idea. We are looking for ways to align our trades on multiple time frames to give us the highest probability of profit, of a winning trade, and this is how we can become consistently profitable traders. Now, these setups work for longer term holds on the daily chart in a bull market. Currently, we are in a bear market, so we're taking the profit that we can get. One thing I like to tell our traders is that if you can gain 2% every day, then you are on the path to becoming very wealthy. If you have $1,000 and gain 2% per day after 365 days, you will have $1.37 million. If you have $1,000 and gain 3% per day after 365 days, you would have $48 million. This is assuming that each day you are using 100% of your account and getting that 2 or 3% gain. So this is what we look for to align trades on multiple time frames. Now, guys, let's have a question and answer session. Does anybody have any questions at all? I know we've went over a lot in this video lesson. Does anybody have any questions at all? Okay, last call if anybody has any questions. Okay, well, that will go ahead and end this broadcast. Thank you for tuning in for Crypto 101, a lesson on trading terminology, chart patterns, technical analysis, and more. We will catch you guys next time. Make sure you subscribe to our YouTube channel, The Kings of Crypto. If you guys are interested in joining our trading community, send us an email at thekingsofcrypto@gmail.com. We send out trade alerts. We give video lessons, trading education. All of it's included in a very small monthly membership compared to what a lot of similar programs offer. We have a great track record of success, and we would look forward to you joining our community. Thank you guys for tuning in. Stay profitable, stay green, and I'll catch you guys next time, traders.